Hello? Hello? Yes, good afternoon, everybody. I hope you can hear my voice and at the same time see my screen clearly. So today's webinar, we're going to look at how to trade the fundamental aspect of trading. That is how to trade news. And the news we're going to trade here is none other than the non-farm payroll news. That is, it's famous known as the NFP. So we've already looked at this before. We've looked at several strategies. We've looked at how to enter trades, especially when there is this news, what to take into account, and when to expect this news. So today I just want us to build on what you've said before. But before then, I want us to first of all look at where you can get the news. You just need to go to the FreshForex website here. Type this in your address bar, and then you go to analytics. Then you go to Forex economic calendar. So Forex economic calendar, this is where you find all the news that we are expecting and the news, the dates when they are expected. And if we had a news which has already played out in the past, you can also find it in this list here. So today, as we're speaking now, the news we expect to trade, the news we expect to talk about, it happens just once in a month, the first Friday of every beginning of the month. That is, if today is 31st, tomorrow is 30th, today is 30th, tomorrow is 31st, then on 1st we expect this news. We expected the same news on 4th of August of this month, and then the previous month the news was on also 7th of July, and then the same news was there on 2nd of June. So the news always happens just once in a month, and that is also the first Friday of that given month. So let's see what will happen. Friday is 1st of September. So let's see what happens. This is 3rd of September. Just a second. This is August 2nd, 20th to 3rd. Okay, let's see. Let's go to news for 3rd. This is 31st, which is tomorrow. So this is the news we expect to be happening. So something else which you need to take into account is that there are 3 major types of news. We do have this one marked with this color, and then we have this one marked with this color, then we have this one marked with this color. So these colors here, they are very, very significant because they signifies the extent to which that news is useful. So they signify the extent to which that given news is useful. This one here, the one which is almost white in color, this is a low impact news. And what it means is that the news is not very important, even though it's important, but it's not very important. Then this one here is medium impact news. This means the news is important, but not as less important as this one. So it's way more important than the other one, the low impact news. Then we have the father of them all, which is the high impact news. This is the most important news, and it's called high impact because it usually has a direct effect of what is happening. So I think this is one thing you need to understand first of all before we can look into that. So this is on 31st of August. So let's check the next day, the news we expect. So this is on 1st of September. So on 1st of September, let's see, we have a medium impact. There's several medium impact, low impact. Then let's see here. This is let's click this. This is Brazilian domestic product GDP. This is also high impact. This is another one. Canadian gross domestic product is also important because it's green in color. And then we have the news, the father of them all, which we will be expecting. This is the non-farm payroll news. So this one, you can just click it to know what it entails. You can just click it and then see exactly how important it is, the currency pair it's going to affect, and then read this. Non-farm payroll represents the number of new jobs created during the previous given month in all non-agricultural sectors of the United States. The indicator growth can have a positive effect on the dollar quote. So you can see the history of performance. This is from this 2019. This is how it has been performing. There was a sharp drop here. It again gained value. Then there is this continuation. It's not increasing or decreasing as such. It's almost within the same limits. It's like within the same high and within the same low. There is nothing much. It's not as low as it was here, but so far from the year 2020 it has been around just the same. So this is how you will normally see it. Unless there is something seriously happening, you will see the other shoot upwards, or you will see it shoot to the lower side. So I hope up to this point we are on the same page. You can read that, you can try to gauge what has been happening, and also you can just sit down on your charts and see when the news was released and what it actually caused. You can see the effect of that given news in the real charts. That is, in your real charts here, you can see exactly the real effect of news. And here, I want us to be working with the dollar as the base currency. So we'll have something like this. We'll have this, and then we'll also have this one. We'll look at those two. So this one here, and also the other one, which is the United States dollar compared to the Swiss franc. So let me say something generally. What usually happens, this is just from my own observation. As you want it. Sorry, I'm saying the market will not do always as you want it. The market will do exactly what it wants to do, and in a manner that only itself understands what it is doing. So even though we are looking at a scenario where we want to say, okay, because there is high employment, this is likely going to happen. With low employment, this is likely going to happen. The idea is that you need not to worry so much about what is happening, especially if you're not sure about what's going to happen after that news immediately. Usually the news will have an effect. The effect will be there maybe for some few seconds. You'll find the price is going up, shooting downwards, or maybe consolidating before shooting upwards or shooting downwards. But the thing is that usually is what happens instantly. The actual effect of any given news is seen after some months. It doesn't happen within the same day. Like if they say today that the dollar has dropped, this is happening. Usually there are a lot of measures put in place before it actually crashes, or before it hits the point that we now say, okay, this is bad, this is too bad, or this is good, this is too good. Measures have to be put in place before that time reaches. So it doesn't just crash instantly. Irrespective of whichever economy, if the economy, assuming we are dealing with the economy of the Canadian economy, or European economy, or whichever economy, however bad the news about that economy could be, the effect is always not instant. You may see an impulse buying, impulse selling, but usually the market settles after that, but the real effect happens some months after the actual news was released. So you can choose to monitor what has been happening with the employment rate in the past, and then make future decisions based on what has been happening, or you may just decide to trade impulsively. Impulsively means you're focusing on the news just been released and what it is causing in the market as we are speaking right now. Are we on the same page? So that's what impulse buying means. It means you just buy, you just sell instantly based on what is currently happening. Now, you remember some times back, I mentioned we talked more about the strategy to use for trading news. I mentioned certain things, I explained certain things. Today, I just want us to build on the same thing. So from the news we had, you saw that the market the news is going to be released at 15:30 GMT plus 3. That is in Moscow time. So just before this news, some 2 to 3 hours, it's always good to step out of any trades which you think are affected by the movements of the dollar. That is, if there is a trade which you are holding on to, you have a pending buy limit, you have a pending sell stop, you have whichever trade you are trading, as long as that news is going to be tested, that news is going to affect that given currency pair where you've entered that trade, it is always way safe to step out of that trade or to just protect your position. That is, have your stop losses, have your take profit in place, just in case the market moves randomly or violently against you, you can still step out either with something or with a small loss without losing everything. So I want us to just build on the strategy which I mentioned before. We are not going to use any indicator as it is now. We've used indicators for a very long time in the past, but today I just want us to look at the real chart based on price action, and I want us to go specifically to the news which has happened. The news was on 4th of August of this month, that we had an NFP there, 4th of August. So we'll move there, 4th of August. So this is 17th, 4th of August, 4th of August, 4th of August. Yes, 4th of August is somewhere here. So we are going straight to where the news was released. So just a second. This is 3rd of August. This is 4th of August. So I want us to get when the news was released. The news is always released at 15:30 GMT plus 3. So we go to 15:30, somewhere here. So look at this. This is when the news, this candle marks the time when the news was released, because at the opening of this candle is when the news was released. Look at what happened. We had a massive spike above everything before the price actually went down and closed lower than everything. Then it continued downwards for some few hours before eventually returning back on a day after the news and even going higher than it was before. So that means that if you had a position, if you had a sell position, a buy position here, and you had your stop loss somewhere here, most likely when the market went up, you were stopped out, because if you had a sell and your stop loss is here, you are stopped out. If you had a buy and you had your stop loss here, you are stopped out either way. So you find that if you enter position or buy position, you lose. If you enter the sell position, you still could have lost some money. That is not the problem. It's probably you're wondering, if you're losing either way, how will you make money if you're losing either way? The answer is very simple. Whenever this news happens, you must learn how to scalp properly. And you must also understand that when the news is being released, a news like this, we do have spreads hiking. That is, spreads suddenly expands before contracting back to normal after the news has been released. So we'll have this as the highest high of that day, and then we'll have this as the lowest low of that day. Just before the news, this is what we had. We had this as the highest high, and we had this as the lowest low, and you highlight it. You highlight it. So what you do to trade successfully is, whenever you've identified this zone and you know very well that this is the highest high we've had and this is the lowest low we've had, and you know that possibly the price may either break below it or break above it, always have a pending buy stop above this high here, and at the same time have a pending sell stop at the same high, sell limit, sorry. Okay, it may sorry. I mean, have a pending buy stop and at the same time have a pending sell stop. And if possible, ensure that you are there when this is happening. When this buy has been triggered and you've confirmed that it is true this buy has been triggered, have a pending sell limit here. on this low. So we'll have a pending buy limit and we'll have a pending sell limit. Then when the price hits this high and this trade is triggered, we'll be having something like a trade with a lot size of around 0.01. Depending on your lot size, we'll have a trade there, a buy with maybe a lot size of 0.01. And when the price goes down, we pick another sell, now with a lot size which is slightly higher than the previous trade, such that when this trade goes into profit, you've had some money, you've earned some money here. At the same time, you've gained what you could have lost somewhere. So the lot size here must be a bit slightly bigger compared to the lot size that you've had somewhere here. So that means you have to be there to watch which trade is executed first. If this is executed first, the lot size 0.01. If it goes into profit, well and good. If it's not executed and this is executed, you watch for the next trade. But if it's executed, hold on to that sell, have a pending buy stop here with a lot size that is slightly higher than the lot size of the previous trade. If this one goes into profit, that is, if this loses and the other one goes into profit, you'll find that you're still in money irrespective of whatever you lost as a result of this sell here. So this is one example. Let's look at the month of the previous month. It was on 7th of July. So 7th of July. This is 7th of July. It's this one. So this one here, this is I just believe this is where the news started here. You can see the market, we were here, the market opened below. So we'll pick this as the lowest low, and then we pick this as the highest high. So you can see that if you are looking at this high and this low, if you are looking at this, so we, in this case here, we'll highlight this zone. We'll highlight it and then mark this high, then mark this low. So we'll have this here, we'll have a pending, we'll pick a sell. Immediately the market opens, we note that, okay, it has triggered, it has gone below the previous days, the previous few hours lowest low. We pick a sell. At the same time, we put a pending buy stop. So this sell goes in profit. So after that, there is nothing more we do. This has played out successfully. Now we look at the month after that, June. It was June on 2nd. That's when the NFP was received. June 2nd. So let's see, June 2nd here. So here also we have the same effect. You can see the market literally gapped after the news. So we had this 1530 is this one. So we had this, and then we had this one. This is the highest high, and this is when the news, I think when the news happened, 1530. This is when the news happened. So immediately the price breaks below either the highest high or the lowest low. When the price is here, you pick a sell position. When the price goes up,